warm welcome to this inderesTV event. My name is Petri Gostowski and I'm co-head of research at Inderes. Tonight I'm going to give you a short introduction to the Helsinki Stock Exchange, and our main presenters today are Relais Group and Solwers, from which representatives will give an introduction to their company. Let's kick off regarding Helsinki. We'll walk through the market through Inderes coverage. We at Inderes cover some 160 companies, which equals to around 85% of the whole Helsinki stock market. So that would be the main list and the First North growth list. Here I have the top 10 companies in terms of market cap, and we can see that Nordea Bank, Kone, the escalator company, and Nokia are among the top 3 companies based on market cap. The whole Helsinki stock exchanges account for some 250 billion in terms of market cap, of which the top 10 companies amounts to some 70%. If we look at the earnings, around three quarters of the Helsinki stock market companies' combined earnings come out of these top 10 companies. So we can say that the Helsinki markets are kind of centralized. We have a heavy industrial and financial companies weight. If we look at the top 10 companies, Nordea Bank being the biggest one, and Sampo, the insurance company, they bring a heavy financial weight to the stock market. And among the top 10 companies, we actually have 5 industrial companies. So the industrial economic industrial outlook and the financial markets are really a driver for the Helsinki Stock Exchange. Then, if we extend our view to the top 25 companies, these amount for some 90% of the total market cap of the Helsinki Stock Exchanges, and they actually bring 95% out of the net earnings. So their weight is very high, and that also means that we have a big chunk of rather small companies in Helsinki. Looking at the market performance of the past few years, we can from here see that especially during 2021, small cap companies were performing very well. Benchmark index of Helsinki not so much, but in line with the MSCI World Index. But then on the other hand, we can see that lately we've fallen behind from the development of the World Index, and there are probably a couple of reasons behind this development, of which I'd say the biggest one is here. So here we have the key metrics for Inderes total coverage. So this gives a good picture of the whole market, as stated, that our coverage accounts for 85% of the Helsinki Stock Exchange. And we can see that in the past few years we had a rather good earnings growth here, but then in 2023 the direction changed, and we clearly saw a decrease in earnings that was mainly driven by weak growth, but then on the other hand, inflation brought cost growth, and also the higher interest rates, or due to the higher interest rates, we saw an increase in financial costs, and we can see that clearly in the 7% median EPS decline in 2023. Based on current year's estimates, we should see a shift in earnings, so we're expecting a slight earnings growth. We actually got some already on Q3, but as you can see from the figures, revenue growth is at some 1%, and operating profit and EPS growth is around 6 to 4%. So that basically means that companies been growing their earnings through savings, which should not be something that happens in the long term. Obviously, we need growth in order to have profit growth, and therefore we're really looking forward to see the economic growth start hopefully next year. Given the market development and the earnings development, if we look at the current next 12 months earnings multiple, so this would be the PE multiple, we're currently at around some 13, whereas the long-term median is around 14. So based on earnings, you could say the valuation is rather modest here in Helsinki, and just want to point out that this is the definitive consensus for the 12 months. So it obviously has Inderes coverage, but it also has other analyst coverage for the whole Helsinki stock market. But nevertheless, on an earnings-based, Helsinki is not expensive, quite the contrary. And remembering the last slide, earnings are coming from a rather low point. So overall, the earnings performances are not on the very high side currently. Then another metric to give you a picture on the valuation in Helsinki, this is the price to book ratio, which is currently at around 1.3. And again, the long-term median is at around 1.7 to 1.8. So there, the discount actually to the longer-term average is much wider, and can't really think of any reasons why we would be valued on a price-to-book based multiple clearly lower than what we've been to. I mean, we can talk about interest rates and the macro environment, but given the current outlook, interest rates are not expected to stay too much higher than what we've witnessed in the longer term, and nothing really has shifted in the Finnish company's outlook. So I wouldn't expect this clear discount to history to be something that would prevail, but we'll see what happens in the future in terms of valuation. If you're new to Inderes, I warmly welcome you to our community. You can explore our research at inderes.fi, SE or DK. There's, like I said, around 160 Finnish companies that we cover. There's a few from Sweden and one from Denmark currently, and hopefully a lot more in the future. I'd like to point out that just recently we initiated coverage on Spotify. I think that's a very familiar company to everyone. Hope you find the research useful. And just to give you an overall picture on our current research stance, we have some 60% positive recommendations on our platform, and on the contrary, 40% negative. So this kind of 60-40 split is something that is in line with the longer-term average, but kind of pictures the low valuation and interesting earnings outlook that we're looking forward to next year. But with that and any further delay, I'll welcome Relais on the stage.
Very good evening, everyone. My name is Arni Ekholm. I'm the Managing Director of Relais Group, and I'm delighted to be able to present our company to you this evening. What is Relais? I guess there are quite a few people who don't know what we do, so I'm more than happy to open up the way we operate and what we do and what our target is for the coming years. We are specialists in our industry, which is the vehicle aftermarket, which I will explain later. We consolidate the Nordic vehicle aftermarket. Currently, we are already one of the leading and the most profitable growth platforms in our industry in Northern Europe. Why do we focus on the vehicle aftermarket? It's because there's the best value creation potential in the market. It's also less cyclical and more defensive than many other markets, and grows steadily, which is very important from an investor point of view. One other thing that is important to understand is that a large part of our business comes from commercial vehicles, and I will explain later why is that important and good for the company. We aim to create shareholder value by achieving strong profit growth with a strategy which is very clear. It's based on 3 mutually supportive factors: acquisitions, organic growth, and operational efficiency. What is the vehicle aftermarket? I promise to open up that a bit more. I mean, you can think about a vehicle being manufactured in a specific country, and then it's exported into a market, like let's say Finland or Sweden, and then it's resold further to the end user. We do not focus on sales of new or pre-owned vehicles. We focus on the aftermarket, i.e. whatever happens to the vehicle after it has been distributed in the specific market. We are currently not engaged in activities in recycling and demolition, but we're also looking at that. So the hotspot for our operations and the acquisitions is in the chart. You can see the blue one in the middle. All from customizing and equipping of the vehicles, import and wholesale of parts and equipment, maintenance and repair, and other supporting services within the aftermarket. What are then the drivers of the market? What's driving the value, and what's our angle to the market? There are about 19 million vehicles in the Nordic and Baltic roads. It's a stable, growing market. The amount of vehicle has grown steadily, and it's not growing double-digit every year, but it's growing. The kind of installed base is very large and fragmented from a distribution point of view. The complexity, technological complexity of the spare parts and components drives value. I mean, the parts and components become more complicated. They have more electricity and technology, i.e. the value of the category is growing. Electrification and other new power line technologies are an opportunity to us. It drives value, opens up new business opportunities in all of the markets we operate in. E-commerce has drastically increased the need for last mile deliveries, which is then producing a lot of aftermarket potential for the light commercial vehicles and also heavy commercial vehicles. Digital disruption offering new opportunities to talk with our customers and the end users. So this is the target market. We estimate that to be roughly 20 billion euros in the Nordics and the Baltics. So there's still a lot of runway to take market shares. How is our business divided, or how does it work? How does it look like? 2/3 of our business and our companies comes from technical wholesale and products. I mean, why I use the word technical wholesale is that this is not just in quotation marks wholesaling. There's a lot of added value in guiding the customers and giving them enough information of what part to choose. So hence the technical wholesale, it's more complicated than for the wholesale in many other products. So it's really adding value. It's guiding the customers a lot. That's 2/3 of the business, and then 1/3 of the business operations come from repair maintenance companies for commercial vehicles in the Nordic countries, namely Finland and Sweden. We have 1,200 professionals in 6 different countries. And if we go back to the technical wholesale and products, it's also, you can divide that into 2 specific areas. We have companies mostly focusing on spare parts, heavy commercial vehicles, light commercial vehicles, and passenger cars. And then we also have many companies specialized in lighting and equipment. Vehicle lighting is a very important product group for us, which I will explain later, comprising of our own brands and own products with a big global potential for export. How has the journey been so far? The company is established in 2010. I joined the group in 2015, and it's been a fantastic journey. We have bought roughly 20 companies during the last 5 years. We got listed on the Helsinki First North Growth Market in 2019, more or less exactly 5 years ago, and then we made a transfer to the main list in 2022. So you can really see it's been a profitable and strong growth coming from both organic and acquired growth. How do we intend to grow in the future? We have multiple levers that we can use to continue the profitable growth journey. As I said, we are already a sizable platform and even a scalable platform for future growth. We can drive organic growth. We have been able to perform faster and stronger than the average market. We have advanced pricing strategies. We have been able to defend our pricing even in inflationary development of cost. Diversifying customer base. There's still pockets that we are not reaching to, pockets of markets. And then there are some product and service offerings that we can continue to explore. Operational excellence is in a way a buzzword, but for us it's very pragmatic. We learn from each other, we learn and benchmark between the companies, and we get stronger and better every day by exchanging information. We put purchase volumes together, negotiate framework contracts with our suppliers. That gives us additional clout in looking at the terms we get from the suppliers. We also try and optimize and focus on working capital levels, which are quite focal and important in a wholesale operation where you need to have the service level which is good enough for the customers, but it can't be too high that it binds too much capital. Bolt-on acquisitions in existing business areas. We can expand geographically. Still, we have some open spaces in the Nordic markets. We can look at different businesses to get critical competence in certain technologies. We can add new products and services, and we can also look at new vehicle types, which we are not operating in at the moment. And then we are also looking at acquiring of new platforms, which would be more or less transformational in nature, maybe outside the current business areas, but within vehicle aftermarket, or then add new business areas within the vehicle aftermarket. Good. Just a few words about Q3. That's the latest period that we have reported. It was the 7th consecutive quarter with EBITDA growth. If we just look at the 12 months running numbers here, our turnover grew with 10% and reached the 300 million bar. Then the comparable EBITDA grew with 18%, which was now at the end of September 34 million. And I'm specifically glad for the good development on earnings per share, which grew with almost 30% up to €1 in the end of September. Looking at some of the capital return metrics, we see significant improvements in all key capital return metrics, and this is really for a company driving wholesale. The return on net working capital is a very important KPI. Usually, let's say the good level is 45%. We have reached 51%. Return on capital employed, also thinking about us as a compounder and consolidator, has grown from 10% to almost 13%. And return on equity also a very steep improvement at the end of Q3. So these are the latest numbers that we have reported. So all in all, very good usage of capital, which for our type of company is one of the key metrics. How do we employ the capital and try to make a, let's say, earnings growth with the companies that we acquire? Sales by segment, we have two segments, geographical segments, Scandinavia, comprising of Sweden, Denmark and Norway, and then Finland and Baltics. And the offtake from this slide is to remember that 55% of our total revenues come from the Scandinavian markets, where Sweden is the absolutely biggest market. Sales by product group for the first 9 months, I already mentioned the repair and maintenance, which we also consider as a product group in this respect. 1/3, spare parts 30%. You can see it's very stable. The only change maybe here is just the amount of equipment, which for us is electrical equipment and workshop equipment, has grown from 16% to 18%. And the lighting business is roughly 20%. Now it's 18% relatively, but growing in absolute terms. Then about acquisitions, that's the heart of our actions, and it's very, you can see the journey we have done. We have done a lot of acquisitions, and we continue scanning the market for acquisition opportunities all the time. In any given time, we have a number of discussions and dialogues ongoing with different parties. Some take months, some take years. This is all about, let's say, sowing the seed in the market and then to become the acquirer of choice for the entrepreneurs and owners who want to sell to us. There are several interesting targets having a good strategic fit with us. I mean, I said that the market is fragmented, so there'd be always good companies to look at. This year we have made 2 acquisitions on the heavy commercial vehicle repair and maintenance business, and we aim to, of course, continue doing the acquisitions in an increasing pace coming to next year. So this is a schematic approach to how would it look like in a typical year on the Scandinavian or Nordic markets. We have identified roughly 550 companies that are in the scope, 170 of them identified as acquisition candidates, 50 plus as priority targets, and then we, as I said, at any given time have, let's say, 10 to 20 companies in active dialogue in different stages of maturity, and we aim to complete an average of 3 to 4 acquisitions per year. How does the outlook look like? I mean, okay, we are in mid of December. This is the official outlook we wrote in September, which is still, of course, valid. The way we described the rest of the year when we wrote this outlook in end of September, after end of September, I mean, it came out in November. The outlook for the rest of the year looks stable. I mean, the market, we do not see any dramatic changes in the underlying market. As I said, the aftermarket is defensive by nature. The economic times are quite rough at the moment, especially in Finland. You can see it on the sales of new vehicles, but then again, we are an aftermarket company, and at the moment, at least, are able to enjoy from the defensive nature of the market and the not so sensitive cyclical market. Our inventory and resource situation is good. A couple of years ago, there were lack of components. Now there are, let's say, no lack of components, so we can actually very well meet the demands of the customers, come what may. Just before the last slide, I want to remind you of our financial target for the 25, which is 50 million comparable EBITDA euro, including also all the acquisitions we make on a pro forma basis next year. And then to summarize, Relais as an investment, active consolidator, compounder, competent compounder with a clear focus on the vehicle aftermarket. We have a track record of successful M&A in a highly fragmented industry with significant acquisition opportunities also for the future. We are exposed to a large, resilient, and structurally growing market. This is a platform which is scalable and it's diversified with diversified business areas with a strong growth potential already per se. We have a consistent, strong, and profitable organic revenue growth with cash-generative business model. So we have a good cash conversion and good cash flow, which is then also fueling our acquisition power for the future. And our business model is decentralized and light, so we do not accrue overhead. So we have a very lean and effective business model with entrepreneurial culture and values in our companies. Just the final slide here to show the performance, the share performance from 2019, including the total shareholder revenue or return with dividends paid during the last years. We have outpaced the Helsinki Index 25 index with 3.2 times, and the total shareholder return since IPO is almost 100%. So it's been a good development as well there. So that was my presentation. I want to thank you all and wish you a good evening.
Thank you, Arni, and
Yes.
Let's continue with the
Thank
Q&A.
you.
Just a reminder to anyone watching through the webcast, you have an opportunity to ask questions through the chat function. We have a few questions here, so let's kick it off with this. The first one is actually looking back at the 5 years you've been listed on the stock exchange. How would you evaluate your performance during the 5 years you've been listed in Helsinki? On what front have you succeeded and what could have been done better?
I think we have said what we said, we have also performed and kind of produced. I mean, our target was first to double the turnover of the company. We in 5 years, so we came there in about a couple of years, and then we changed the target into even higher, then changed it to a profit target, and we are beating the Helsinki Index. Of course, I admit the Helsinki Index is not a very good one, but let's say a total shareholder return of almost 100% in 5 years is not bad. Yeah, we could have done more acquisitions. I think so. I mean, we are very disciplined, So our business model is also reliant on from the fact that the capital allocation and the deployment of capital, we need to meet certain metrics. So it would be easy to buy companies if you wouldn't have to care about what price you pay. But we want to have a good return for the shareholders. So I'd rather walk away from a bad deal than let's say, and wait for the good deal.
Yeah, you need to be selective.
Absolutely.
Let's continue on the acquisitions. If we continue looking back, how would you evaluate your prior acquisitions? Has the strategy been value creative?
I think so, yeah. Of course, there are differences in the different business areas are by nature are different already. If we look at the repair and maintenance business, where traditionally or generally, let's say the EBITDA or EBITDA percentages vary between, let's say, a small, lowish single digit, we have reached already and approaching a double-digit EBITDA percentage. So we have been able to develop the companies in that sector. Say most of the wholesale companies we have bought have been able also to perform better. But of course, you have different challenges, and let's say the year 22 was a tough one. There was a lot of lack of components, and also, yeah, we all know what happened in 22 in the market. So let's say, but that has nothing to do with the acquisitions. All in all, I would say we are happy. But there are always, if I have many kids, always some of them might have some challenges.
Sure.
That I try to father them to the right direction.
Definitely, yes. Then continuing actually on acquisitions, how would you describe an ideal acquisition target for Relais?
There would be many different levels in ideal acquisition targets. I mean, you would have these kind of smaller bolt-on acquisitions to existing platforms, where we would want to see, I mean, in all types of acquisitions, whether it's bolt-on or, let's say, medium-sized or transformative, what we typically want to see is a sustainable level of profitability. I mean, we seldom buy companies that have recently experienced a hockey stick type of development, or at least we need to understand why the development has been what it has. I mean, we value this kind of a steady, stable, but still growing market performance for the companies, and a strong, let's say, ownership. There might be an entrepreneur who sells his or her baby to us, or terrible to say that, or life work to us, or then it could be a private equity selling to us. But mostly we would like to keep the kind of entrepreneurial spirit, and that's the kind of a dream scenario where the entrepreneur stays on with a certain structure.
Sure. One more on the M&A topic. How much room do you have for future acquisitions?
Yeah, it's a good question. We currently have a certain amount left from the senior facility. Then, of course, we can use our share. We have a mandate of 20% issuing new shares. And also there are different types of tools in the toolbox. We usually, let's say, tend to buy a majority and then maybe leave a minority for a certain amount of period, or a certain period of time, with an earnout mechanism, or then there's a vendor note possibility. So all in all, I say that we have a good potential to then collect maybe new funding if needed, or then just to carry on with the current pace with the current funding we have.
Then let's jump onto competition. There are a lot of wholesale companies and repair and maintenance companies on the markets. Can you differentiate in this business somehow from competition?
Yeah, that's again good question. I mean, let's take the repair and maintenance of the commercial vehicles first. It's very typical in the Nordic markets and maybe elsewhere in Europe that the OE players or the vehicle aftermarket, the vehicle manufacturers, control that market. They have a very high market share. Not to give any names, but the most, let's say, known truck brands would maybe typically have 70 to 80% of the repair market. So which leaves about 20 to 30% for the so-called independent aftermarket. That's the share that we are pushing actively to offer these possibilities for the fleet customers, transport companies, that, hey, you can actually repair and maintain your vehicle also outside the OE sphere, so to speak. So that would be the let's say, main competitors from our perspective would be the OE players. Then looking at the wholesale, there are some Nordic level, let's say, operators as well. But quite often in this business, they are also our customers, since we are very niche and specialized wholesalers. So it's more complicated than that. Just to point out, there is competition, of course, and it's always good for the customer's point of view as well. There's competition. Nothing really dramatic has changed during the last years. The picture is quite stable.
Sure. One more question, unless someone sends another one, but you've been at Relais for a long time. How has the number of potential purchase targets changed over the years?
Well, as I said, or showed in the presentation, we have roughly, say, 170 targets that we have identified. That has changed, of course. Let's say the strategy for 10 years ago was different than it's now. So we are looking at different types of companies, but within the aftermarket. So it's not always the same. If I'm saying that we have about 10 to 20 discussions ongoing, some of them don't materialize. So there's always new stuff coming into the pipeline. Hard to say whether the division of the targets from business unit to another has changed so a lot. Some of them are opportunistic as well, that the owner matures into a situation where he or she wants to sell the company. So complicated answer to a simple question, but it's impossible to say how it has changed, but it has changed. And some of the targets come up again after a certain period of time.
Right. I'll use this opportunity to ask one more on the same topic. Has the process of your acquisition, when you do an acquisition, has the process changed over the course of this period? And thinking of how you've grown over size, have you been able to scale the process? So educate
absolutely.
everyone in the company.
It has changed from actually then basically myself and one board member doing them in the beginning to that now we have an M&A department. Of two very highly professional people, and then we have an investment committee with myself and the M&A team and the chairman of the board and one board member, and also we have then trained the unit managers or the managing directors to also run their own processes, and we help them, of course, in that. But we have a playbook, a 100-day onboarding program, and also a playbook of how to do acquisitions. But we help the company, so we can spread the responsibility to our 20 companies who also feed into the pipeline. But they can also run their own processes with our help or external help. So it has changed a lot.
One more question, if I may. If I manage to throw in one. Yeah. What kind of bottlenecks does Relais have? Why don't you aim for stronger growth?
As I said, it would be easy to buy anything if you pay anything they ask. So I do not consider it as a negative bottleneck. I regard it from a shareholder point of view that the discipline is good, because then we can make sure that the return on investment is good as well. So if we would have unlimited funding, then we would do more deals. But then again, it might be that the flip side of the coin is that then you tend to buy stuff with not so disciplined way. And other types of bottlenecks, I do not really. I think we have let's say enough resources at the moment to still continue a good growth. But if we are talking about doubling the let's say the size of the company, that would require transformative acquisitions. It's very hard to do that in an organic environment. It would let's say in 1 year or something like that. But so that would be my answer to your last question. Or do you still have more?
I think we'll finish
okay.
Right here. Thank you very much,
you, Petri.
and wishing you all the best for
Thank you. The
next
same.
year.
Thank you.
Thank you.
Hello, my name is Stefan Nyström. I'm the CEO of Solwers. And welcome to the presentation. This is the agenda for today. First, what is Solwers? And then this year, what has we been doing? And then Solwers and an investment. On the right-hand side, you can see the companies belonging to Solwers. And they are there with their own brand because they actually operate on their own brand and own identity. Solwers is more like a platform for these companies in order to make business together. But they are really actually acting on their own brand and identity. We are now 29 companies in Solwers, and we are acting in 2 countries, Finland and Sweden. And we are about 700 experts in the group. And this is what we do. Project management, architectural design, infrastructural design, plant engineering, energy and transmission and distribution engineering, electrical and automation, HVAC, acoustic design, environmental monitoring, and then management consulting in logistic and rail transportation, and then also financial management services. We usually start with a finance management service company in a country in order to have somebody taking care of the reporting. And of course, these companies has also external clients. We have the concept, as I said, is a little bit different. We have a light integration. We want to integrate the business, I mean projects, offering, marketing and sales, and this part, but we don't integrate the organization and the processes and this stuff. So it's possible then to actually grow with a profit, and we don't need to use all our time to integrate. Everybody know that integration is maybe not so nice always for those who are working in the company. We have a very small group organization. You can see them there on the picture. And then we have 2 management teams, one in Finland and one in Sweden, where all the MDs of our subsidiaries are present. And we have 2 because, first of all, we are quite many, and secondly, because then we can use Swedish language in Sweden and Finnish in Finland. Our target is to continue to grow. Mainly we are growing through acquisitions, but of course organic growth is on our focus list, but it has been tough times, but we think that in the future there will be more organic growth, but also of course acquisitions. And one important thing is we want to be a good employer, and we think that our concept with not integrating all companies helps us there. And of course, we don't have any other assets than our personnel, so it's really a cornerstone for our business to be good at that. Here you can see our journey. We founded the group in 2017, but the companies that belongs to the group has been acting, most of them more than 10 years, some of them even 50 years. So these subsidiaries, they are known, but Solwers is not that known because we are so young. In 2021, we went to the First North list, but here you can see the companies. Actually, in 2019, we acquired the first companies in Sweden, and then we have been growing about, in average, since we went to the First North with 27% annually. And the last 6 acquisitions you can see there under the 2024. And here is our growth. We have doubled our revenue since we went to the First North, and we think that we will continue to grow. And here are some figures. Growth has been very good. We have actually 3 targets. It's growth, and then we have also this equity ratio. It has been on the same level since 2021. And then we have a little bit suffered with the EBIT and EBITDA because of the market situation that has been for our branch very tough. And then a little bit about our M&A strategy. We have now made already 29, and I think that we are learning all the time. And we usually, the most important thing when we are buying companies is what are they providing for services. The services they are providing need to be supporting the existing subsidiaries that we have in the group. And then we can share actually the client bases and serve all our clients or their clients with broader service packages. Normally, we buy the companies so that the value of the company is actually based on the following, for example, 3 years or so, that we have a kind of base price and then we are having the earn-out. And it's also important for us that the, let's say, organization wants to continue in Solwers. And that has actually been a criteria for many who has joined Solwers, that because of our concept, they want to join us, even if there maybe would be someone who would pay more than we do, because they know that they can continue to work and they have maybe founded a company and it's like their baby. Typically, we acquire 100%. That was not the case in the beginning, but it's now usually we buy 100% of the companies. And here you can see the companies we have and also which are in Finland on the left side and which are in Sweden on the right-hand side. And at the bottom you can see the one who are serving the private sector and then on the top those who are actually working for the public sector. And it's about 50-50 public and private, and that's from risk perspective it's good that we have divided it, and also that we are divided into 2 countries and very many locations. Our projects are normally small. We have more than 3,000 active projects per year, and only maybe a handful are more than 1 million euro projects. Here are some examples of projects. Transformation station in Sweden. We all know that the green transition needs electricity, and you have to move it from place A to B, and for that you need these transformer stations. Then there is a biggest building using recycled bricks also in Sweden. With that we have actually saved 2,200 tons of less CO2 emission. Then we have our management consultants in Stockholm. They have made the Gant warehouse relocation in Europe. And then our architects are very much involved in big hospital projects. That was just a pick. I said that we have more than 3,000 projects a year. So where are we today? The market recovery that we has delayed, but we can see that there is now positive signals. We are, like every engineering company, we are depending on investments, and right now it's a little bit the situation that the investments are pending. They are waiting for maybe that the interest come further down or whatever, but I think there is a kind of uncertainty on the market. But we have seen already now in that there are positive signals, and we are going towards better times. The price competition has been hard. especially if we are talking about public sector projects, and if there is no requirement for, let's say, quality, only prices, then it's really tough. So we are trying to avoid these kind of projects. But the most difficult are those companies involved in residential and office projects. But they are, of course, offering other projects if there is not any quality requirements. That's why the price competition is very hard if there is no requirement for that. The infrastructure business is stable, and the industry project in North Sweden is actually good, even if there has been some uncertainty connected to Northvolt. But there are huge projects, and so far it's not. So far we have more problem with getting enough resources, but a small change there has been. Growth is good. This is the 3 first quarters. As I said, the profitability has a little bit suffered from the market situation, but is still profitable, our growth, and equity ratio has been on the same level, as long as we have been on the listed. So, in brief, we can say that 20% revenue growth, mainly because of acquisitions. And we have done 6 this year, 4 in Sweden, 2 in Finland. And the order stock has picked up towards the end of the year, so that is positive. But you cannot see it still in the profit. First you get in the orders, but then you also have to do the projects. That's how it goes. And we have a better profitability in the Swedish companies than in the Finnish in the first 3 quarters. And as said, we have many interesting project offers now in pipeline, both on the private and public sector, and also new frame agreements. So we think that next year will definitely be better than this one. The profitability, the reason why it has been lower is actually that low investment activity. As we said before, we need investments because that is where we are doing the design. And a tough price competition and a little bit lower billing rate has been the reason. And here are the acquisitions this year. WiseGate, I think that WiseGate is the biggest one, and then we have also Siren is the oldest architectural company in Finland, and Spectra, working a lot with electrical design and automation. And so we are continuing our strategy to grow with acquisitions. Then we have also decided now to take a 3rd country, Poland, and like we have done before, first Finland, then Sweden, now Poland. And the reason for Poland is the main reason, of course, is that it's a big market and it's part of EU, and there is a lot of investments going on in infra energy, and we also think that the Polish engineering companies will be involved in the rebuild of Ukraine one day. That is not the main reason, but that could be an add-on. And then our financial targets, we have 3, of which we have achieved 2 since we went to the First North. We have been growing 27% annually on average, and then equity ratio we have better than 40. But EBITDA we have been suffering because of but we think that we will not change it. We will think that we will come back also with the 3rd one. And why invest in Solwers? Well, I think that we are quite good in acquisitions. We are doing it very thoroughly, and we have learned a lot along the way. So that is something, a process that we are very good at. And we have made profitable growth. Actually, we have been growing fast. And this, our concept is actually possible to scale. As said, we have now moved to a third country. And there are many countries, so we can continue with the risk. From risk management perspective, I think that it's good when we are active in so many locations and 2 countries, and we have this many small projects, which actually is during these times what we have seen now very good. And then we are sharing dividends as well, 20 to 40%, because we have a lot of owners in our personnel, and we want also to have dividends for them. So I would say that this fast growth, profitable growth, and moving into new countries and growing then 100%, more than 100% since we went to the first North list. That is a good reason why to invest. And then I think also we will have better times. We have during our journey on the stock market, we have had the COVID, and then after that we have the Putin's war. So now maybe there will be some more peaceful times when we look forward. I hope so, at least. So thank you. That was what I wanted to tell it to you.
Thank you, Stefan. Let's continue with the Q&A, please.
Yes, thank you.
Have a seat. Just a reminder, anyone on the webcast, please feel free to send us some more questions. But let's kick it off with a similar question as to Relais. You've been listed in Helsinki for some 3.5 years now.
Yeah.
How would you evaluate your performance during this time? On what front have you succeeded, and what could have been done better?
Well, I think we have been doing what we said we will do. We have been growing. We have been following our strategy to actually acquire companies. And maybe the only thing that we have not achieved the profitability now the last years because of the market situation. But otherwise, I think we have done what we said we would do. Maybe if you think what we could do better, there is always, of course, a lot of things you can do better. But I think maybe we have now improved our cash management. That we have had actually quite a lot of cash in our balance. But I think that the times have been quite uncertain, so it's good to have some cash in the balance.
Then let's jump to your M&A strategy. Start off with an easy one. How much room do you have for future acquisitions?
Well, we have a new financial agreement now, so we are able to continue our growth. But of course, our target is about 20% per year, because then we can actually choose the companies, and like the previous person said, it takes many discussions before you can end up in a M&A. We can, of course, a little bit grow the size of the M&As, but because it's almost the same work behind every M&A.
Yeah, the process is the same. Then also looking back on your M&A, how would you evaluate your peer acquisitions? Has the strategy been value creative?
Yeah, I think they have been. Of course, there are different. Some of them are very good. Some of them have some challenges, but that is our actually thing, that we are developing the companies together with their management. And then actually maybe the price is a little bit lower, but then later maybe the profit can be quite good actually from these companies. But I would say that yes, and of course the most important thing is that they are supporting the existing one, because then we can actually sell broader our services. We have a lot of, let's say, 29 companies. They have all their own clients, but they are selling only, or have been selling only to their own clients. They own actually part of the design, but now they can actually sell broader to their own clients. This is something that we are working a lot on.
So basically looking at synergies on the sales front.
Yes.
Then continue.
And marketing and sales and project and offering and things. There we are integrating and having our own management team meetings once a month, but we are not integrating the organization and the processes and things like that.
Right. Continuing on M&A, there's a question, what are your main strategies for attracting potential acquisition targets? Why do they choose Solwers?
I think it's definitely because of our concept, because usually those who we are acquiring, they have been founded the companies, and they are very interested in the future of the company. And in our concept, they will continue on their own brand, and they will we will not mess up the organization, and actually they can continue to work there. So it's I would say that 95% of those who have joined Solwers has done it because of the concept.
Right.
Because we are not paying the best price.
Yeah, so not price, but other ways of attracting.
Yes.
Let's have one more questions on acquisitions and then move to other topics. There's a question on what challenges have you faced in acquiring or integrating new companies?
Well, I think that in the beginning when we were buying small companies and maybe not 100%, it was a small company with only maybe 10 person. There is very little structure in them. So I would say that now when we are buying a little bit bigger one, it's easier. But that is maybe one thing that we have faced, that they can be very profitable, but they have done things in a certain way, and they tend a little bit to do it also in the future.
Right. Then let's go back to your financial targets. You aim for higher than 20% growth and higher than 12% EBITDA margin. Can you explain how these targets will be reached going forward?
Well, the first one we have reached every year, and actually it's the 27. The EBITDA, I think that we can achieve that also in the future, because we have had quite tough on our market. It has been quite tough situation, and I think with this growth and we still have a profitable growth. So I think that if we look back before these all wars and things like that, we had a quite good profit. So I think that we will come back.
Yeah, so better market times would help definitely on that front. Yeah.
We need these investments.
Right, yes. I think we all need them.
Yes.
Then there's a question on your financial metrics. Can you elaborate on the key financial metrics investors should focus on when evaluating Solwers?
Well, I think, of course, growth is one. I think that EBIT is certainly one. But then I think that we need to, as I said, improve our cash management, that we don't have so much cash in the balance, but that is something we are working on.
Yes, so balance sheet items. Let's have one more question. So looking into the future, how would you describe the current market environment and what kind of expectations do you have for 2025?
Well, definitely I think that the 25 will be better than the 24. But how fast this recovery will happen is a little bit question mark. We have seen that all prognosis in the past has been wrong. It has taken longer, but I think that next year can be quite good, actually.
Looking forward to that. Thank you, Stefan. Let's conclude here. Thank you for all listeners. Please feel free to continue discussion on Solwers on inderes.fi and also find research, both available in Finnish and English on our platform. Thank you, and all the best for the rest of the year.
Thank you.